Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Ausbil to discuss environmental, social and corporate governance is Head of ESG Research, Mons Carlsson-Sweeny. Mons, welcome to FNN.
Thank you for having me.
Mons, can you start by telling us what is ESG and how has it evolved over time?
Right. Responsible investments has evolved a fair bit in the last decades. So it started out with ethical investments, which is where investors are excluding companies or entire sectors based on their moral beliefs. So for instance, a negative screen on alcohol and tobacco companies. Then came socially responsible investments, or SRI, which is where investors are trying to seek out companies doing the right thing. And then came ESG integration and sustainable investment, so integration of environmental, social and governance factors. So whilst an ethical investor might want to screen out companies based on their personal beliefs and might be happy to forfeit returns, with ESG integration, what you're really trying to do is to capture all risks and opportunities and therefore maximise your returns.
Thanks, Mons. And in your experience, why is ESG so important?
I think the importance of ESG integration really comes down to better informed investment decisions, which can then drive better results. So if you look at the average listed company, the majority of that company's value comes from intangible drivers, which are things you don't necessarily find in a financial statement. So examples include, for instance, a company's culture, its corporate governance, its supplier and customer relationships. So it's important for us as analysts to analyse how companies are managing their intangible drivers, and in doing so, we make better informed investment decisions, and we can avoid some of the corporate blow-ups we've seen in recent years. We can also assess companies' earnings sustainability. So in short, we can make better informed investment decisions.
So what needs to be done better when it comes to implementing ESG policies?
Yeah, so we spend a fair bit of time engaging with companies, both their boards and management. And those engagements can be on a wide range of issues, not just corporate governance and executive remuneration, but a lot of ESG issues too. And one such issue has been supply chain management. And that's really important for a number of reasons. First, and this comes back to labour rights and human rights in the supply chain. First of all, the company's brand is its key assets. And then sometimes a brand can be equivalent to a high proportion of a company's market cap. But brands are sensitive. If something goes wrong, it's very time consuming and very costly for companies to restore that brand once the trust has been broken. The other thing is human rights and labour rights issues in the supply chain can also be associated with business risks and production disruption. And the third thing is, I think you can tell something about the company's management by the way they deal with their suppliers. So if a company 3 years after Rana Plaza building collapse in Bangladesh is still paying lip service to ethical sourcing, that tells you something about the management quality. And management quality for us is a key important factor for when we make our investment decisions.
So how does Ausbil integrate ESG factors into its investment decisions?
So we try to avoid concept stocks and stocks that have unaccessible earnings. We prefer to invest in companies with sustainable earnings and quality management, and ESG can play a big part in that analysis. So we use a four-stage approach. First, macroeconomic analysis, followed by sectoral analysis, stock selection and portfolio construction. So ESG can be a part of that, all four stages, but the magnitude, of course, depends on which company and which industry. We don't buy off-the-shelf ESG research, so we have our own ESG research team in-house, a dedicated team that produces proprietary ESG research, which we think can give us unique insights. Because often with these ESG issues, they can be complex, and you need to dig deep into that and do detective work. And then the ESG research we do is integrated in the investment decision-making process.
So what would you say the most pressing ESG issues occupying companies today?
There's quite a few issues, and some of them are emerging, but I think climate change is one of the probably the number one issue facing Australia and Australia's companies. So first you have regulatory risk. Australia signed up the Paris deal, and there's going to be some regulatory changes coming out of that. The second one, of course, is physical climate change risk. So more extreme weather events and how that's going to impact companies. The second one is food safety. So you've got Australia's economy transitioning from being mining-based to exports in food, for instance. The Australian brand is very highly regarded in Southeast Asia, but it doesn't take much to change that attitude. I think any supply chain hiccups in terms of food safety or food quality can have some major impacts. It's very important that when we invest in companies in that industry, that we look at how they manage their food safety. Another one, I think, is human rights and labour rights in the supply chain. I think consumers are increasingly aware of where their goods are being manufactured, and consumers can be very unforgiving, and unforgiving in the sense that it takes a very long time and it's costly for companies to restore their brands once they get damaged. Another issue, I think, is cybersecurity. I mean, when you talk to banks, it's very clear that that's a major threat to the banks, and same thing with data privacy. So there's a lot of emerging ESG issues coming up as well.
And finally, Mons, to recap, how does ESG apply to portfolio construction?
Right, I think ESG as a tool can be very useful to find downside risk. You can even short stocks on ESG grounds. So sometimes you might find a short-term catalyst based on the environmental or social risk, or even corporate governance risks. The other thing with ESG is you can assess a company's earnings sustainability. So if a company's earnings rely on underpaid labour, for instance, underpriced pollution, etc., or maybe earnings aren't sustainable in the long term. So for us, ESG can be a really good tool to find or to assess a company's earnings quality, its management quality, and also earnings sustainability, which are key parts of our investment decision making.